Yo, what's up, everybody? It is Wednesday, April 9th. Woo, what a day! Crazy day, folks. We had a record up day. Trump, he paused the tariffs for 90 days, except for China. He put a 125% tariff on China effective immediately. So there's like a real trade war going on there between the US and China. And the other stuff he paused. So the shorts got squeezed and the market ran up. Like, my portfolio was freaking unbelievable. I actually was doing some buying today. I woke up this morning kind of stressed out, I'll be honest, because what was going on with bonds. I'm going to talk about that in a second. And then, I had to collect myself. By the way, I just got back from boxing, if I look a little disheveled or whatever, but I just got out of the shower. But I woke up a little bit stressed out. I had to collect myself. Like, sometimes you got to just you got to talk to yourself like, hey, Mike, pull yourself together. I mean, it's not the end of the world. I mean, things could be major, big time worse than this in your life. I mean, and then I even sent out an email to my people, my subscribers, just like, everybody, let's be strong. Let's be resilient. This is not a bad thing. It's a good thing. It teaches resilience. It teaches fortitude. It gives you grit. It gives you character. Get through this, man. Things could be a lot worse. We're just talking about money here. We're not talking about, health or something, God forbid, with your kids or something like that. So yeah, I had to pull myself together, and then I said, fuck it, I'm going to take some money. I have, money that I keep separately. I guess you could call it savings or whatever. I put some. I said, market's down again. I'm going in. I'm buying some more. But anyway, that was nice what happened. I don't know if it's going to last, just because I'm still watching these flows and everything looks, okay. I'm a little bit concerned about the dip that I'm seeing in net government transfers. That's important, but leading flows are still trending up. Now, let me get to the bond thing. That's what if this market rally didn't happen today, I would have spent all this time talking about the bonds, which I'm going to do anyway. So everybody, I woke up and I'm looking at the headlines, and every single headline was, a bond market crash and a bond collapse and a bond this and a bond that, and a yield spike and yields this and yields that. And again, I had to kind of pull myself together and say, whenever something like this happens, when it gets like hyperbolic emotional in the headlines, and by the way, this is another reason why you should never, ever look at the headlines, because the headlines are created to grab your attention. And the people who write these things, especially when it comes to economics, I mean, they don't know shit. I mean, they don't know anything. You're talking about like these basically entry-level journalists, and I don't even care if these are financial people from Wall Street. I've been on Wall Street basically my whole career. I know a lot of these people. They don't know anything. They're as backward, as confused as you could possibly be. But the main thing is that these headlines and these stories are crafted to grab your attention. All right, just as on a side note, and I don't want to, digress here, but when I worked at Fox, all right, we'd have a story like, let's say we'd be preparing for a show on Saturday or whatever. So like on Thursday or Friday, the producers send us the information, send us the talking points, the topics we're going to be discussing. And there were times I can remember when they'll send something and, we want to talk about this because, XYZ is happening. And I'm an economist. I'm trained in that. So I would send the producer back. I would email him back saying, yo, that's not what's happening. That's not the way it's going down. I mean, I know this stuff because that's what I do for a living. And producer be like, that's okay. We want to talk about it like that. So, I mean, you're just getting manipulated, man. Like, if you think you're looking at that and I've been talking about this now for the last couple of videos. As human beings, we're emotional beings. We're prone to emotion. You got to work on that. All right? You got to, like I said to myself, hey, pull yourself together, man. I woke up, I'll tell you something. I woke up during the night, and I'm a good sleeper. I woke up during the night like 3 hours before I was supposed to wake up. And I looked at the clock and I'm like, oh, good, I have all this time to sleep still. I'm going to fall back to sleep. And then I couldn't fall back to sleep because I was thinking about this shit like it was really in my brain. And I was allowing myself, and I'm thinking like, think about the cortisol building up in your body and all this stress hormones and shit like that. It's really bad for you. That's why I said that. I finally fell asleep for like an hour, I guess. And when I got up, I said, look, Mike, pull yourself together. Like, you got to reframe this thing in your head. That's it. It's not the end of the world. It's not the end of your life. I mean, like, anyway, so all I heard was bond this and bond that, and the yields this and the yields this and the yield spikes and this and that. And so what do? You go up to 30,000 feet. You get some perspective, right? And I looked. And so when I woke up, the 10-year was at 441, 440, 441, maybe even 445%. All right? Now, yeah, that was a big jump from 2 days ago. We were at 384. But when we were at 384, I said, you know, it's a little bit stretched. I did the thing yesterday with the rubber band. Boom. Came back. And I'm thinking to myself, well, where were we 1 year ago? 1 year ago, we were at 455. Now we're at 445. And guess what? The Fed has been sitting with a policy rate between 4.25% and 4.5% for a long time, and has been saying they're not in any rush to cut rates. So, like, what happened? What's the big deal? A year ago, we were at 455. The Fed cut rates. The policy rate's 4.25% to 4.5%. We've been bouncing around. Now we're back. You know, we went down to 384, which was too far down on the low side, since the Fed's saying we're not in a rush to cut rates. We snapped back up, and now we're at 445. What is the big freaking deal? Now, that's what you call perspective. That's what you call, you know, flying at 30,000 feet and getting the right picture of the landscape of what's going on. Not this, oh my God, this is the worst freaking bond crash in the history of the universe. Like, it's fucking ridiculous, okay? Now, let me say something else. Because the big story with the bonds today, everyone's talking about the basis trade. The basis trade's blowing up. The basis trade this. The basis trade that. It's blowing up. It's exploding. The basis... Come on, man. All right, what's the basis trade? The basis trade is when you buy the underlying and you sell the futures if there's a small discrepancy. It's basically an arbitrage. If there's a discrepancy between the futures price and the cash price, and you could exploit that, and we're really talking about fractional discrepancies. They're never, ever wide, because arbitrage, normally they don't even exist, these discrepancies. And that is a question that I have. Like, how come so much money purportedly was in this basis trade? I used to try to do them myself, okay, with options way, way back, you know, doing conversions and reversals, which are basically risk-free arbitrage trades and options, if you could put them on. But you got to leg into them, and if you leg into them, then you're taking risk on one side or the other. Like, it was impossible to put on these arbitrage trades outright. All right? Same thing with spread trades when I was in the oil market, you know, and I knew some very big players who uniquely, solely, that's all they did was traded spreads. But like, you know, if you try to outright buy a spread with some kind of differential in there that you can arb out, You couldn't do it. You had to leg into it. And then it's just basically like directional trading if you leg into it. So like everybody's talking about the basis trades blowing up and this and that. They're saying China's selling. That's another thing I want to talk about, which is total freaking bullshit. Who's in this freaking basis trade and why, how big is that differential that so many, purportedly they piled into this trade in the billions and billions? Like, you know what? Number one, I don't pay attention to this shit. And if it's blowing up, I can give you endless examples of things that blew up and we don't even talk about it anymore. Remember Silicon Valley Bank? No, you don't remember it, right? That was the biggest thing happening in 2023. And I said the same thing. Just don't pay attention to it. It's going to go away. Everybody was like, the banking system's going to collapse. It's going to be a funding crisis and a crisis this and a crisis that. You don't even remember the SVB, right? I'm telling you. So the same thing, if a basis trade, if it's blowing up, I do not give a shit. It is not related to the fundamentals whatsoever. And that's what I pay attention to. 30,000 feet. Okay, 30,000 feet. That's where I'm flying. I don't care about the basis trade. And I think people who do that, maybe there's a need for that to keep, the curve in line or whatever. I don't know. To me, they're like, these people who do that, they remind me of these, these fish that swim alongside the sharks to get little bits of food when the shark, devours something. And these little tiny, they're not parasites really. They're symbiotic, I think the relationship is called. And that's what they're going for, these little crumbs, these little bits of flesh after the big king of the sea shark devours some fish. These little things, that's what I think of these people doing the basis trade, okay? That's Mike Norman's opinion of these people doing the stupid basis trade. That's the best you can think of? Like you're such a freaking genius? Jesus Christ. It's like this guy, these guys who do this algo crap. And I'm talking about one guy in particular. I'm sorry, but I always forget these guys' names. Maybe because I'm old, or maybe because I just don't care about these people, right? The one who runs Citadel, his company, what they do is they buy the order flow from like Schwab and TD Ameritrade, and then they jump in front of it. All their computers are, I talked about this so many times, they have their computers all installed like at the New York Stock Exchange or the Chicago Merck's data center out in Illinois. And basically it's legalized front running, right? I don't give a shit about these people. I think they're freaking losers, all right? That's the only way they can make money. Basically, it's like legalized cheating. It's like taking PEDs in sports or something like that. Which, by the way, I think taking PEDs in sports, I'm more for that than these guys, who have amassed billions of dollars basically front running. Anyway, we weren't allowed to there was a time down on the trading floor when I was down there where that was not illegal. The exchanges kind of looked away. And, after they had the FBI bust in Chicago in the mid 80s, which by the way, nothing came of that. But after that, the exchanges started cracking down on front running. Like if you were a broker in the pit, you weren't allowed to trade ahead of your customer orders. Like I knew guys in gold in the very notorious days of the late 70s and the early 80s who made millions just trading against their customer orders. Orders never even got into the pit. All right? This was in the big gold days of the late 70s, early 80s. And, they'd get market orders and they would just cross the orders against their own accounts. Never even got into the pit, nothing. So they made a lot of money by stealing, all right? Anyway, the basis trade, people call it, smart people call it, and I think even some of the guys who do it, will call it picking up dimes in front of a steamroller. All right, if you imagine that picture, big giant steamroller coming along, flattening everything out, and you're there right in front of it picking up dimes and hoping, it works until it doesn't, then it blows up. I remember there used to be a firm called Chicago Research and Trading, CRT, back in the 80s. They were a big options trading house, started by two guys out of Chicago. Right now, the big options trading house is Susquehanna, and they do a lot of these, like index arbitrage. But back then, it was CRT. I think CRT eventually got bought by, I think it was Nations Bank back at the time. That bank got swallowed up by something else. And the guy, one of the founders of CRT, he's the one who coined that phrase, like picking up dimes in front of a steamroller. Like it works. And then one day something happens out of the blue, and all of a sudden, what CRT used to do is on the day of expiration, they used to sell the expiring options like in the thousands of contracts, okay? Because they figured the probability is like 99.9% that those are going to expire worthless. So they were making like, what they used to call a cabinet, a haircut, a tiny little profit, but they did it over thousands and thousands of contracts on every day on expiration. And they did that, month after month after month. So it was like steady income, but then there'd be every once in a while, something would happen on expiration day and everything would shoot up, everything would reverse. And those guys, maybe 6 months of profits would be wiped out or something like that. And I knew the same thing in the oil markets. We had guys in the oil markets who all they did were spreads, oil spreads. They specialized in that. And again, they would look to make a very small profit on a spread, but they would put on huge positions. We had some guys in the back months of oil, the back months or the distant months. They were the market makers. Like you literally had oil companies, big oil companies coming to these little guys asking them for a market. These guys dominated. But every once in a while, something would happen and it would blow up. And you'd see these guys, they'd be carried out, carried off the floor because they get wiped out or like they take huge hits. Anyway, so I don't pay attention to that. All right. And what will be. Look, I keep saying, like, if the Fed raises rates, I'm wrong. All right? If inflation blows through the roof, I'm wrong. If the economy zooms up to 5-6% growth, I'm wrong. So right now, somebody said, oh, you sound defensive. You sound judgmental. I'm just explaining where I'm coming from. That's it. If you're going to judge me, I feel like I have to explain where I'm coming from and what my thought process is here. So anyway, wild day, man. Never a dull moment. Sometimes there's dull moments for long periods of time, and then you get something like this. But, one thing, and I said this last year, that we could always count on from Trump is a lot of volatility. The guy's not afraid to change his mind. He could change his mind on a dime, on an instant. And that's what he did today. For all we know, he could change it back tomorrow, or something new could pop up. And be careful about that, because from what I understand, the U.S., is mounting up like some pretty heavy firepower there in the Middle East. Supposedly we got half of our stealth bomber fleet over there. I think we got 3 aircraft carrier groups over there. There's a meeting with Iran that Trump said they're going to be talking directly with Iran. And Trump said if the meeting doesn't go well, it's going to be very, very bad for Iran. So he might deflect this whole tariff thing into a war next week. But today was an amazing day. Anyway, that's it for today. Please like and subscribe. And go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. Stay strong. Stay resilient. You know, like what I did today. Just like take yourself and like, hey, reframe. Get a hold of yourself. Be strong at all times. At all times. Fight through the fear. Fight through the emotion. Control your emotion. Let the others be like that. You don't be like that. All right, bye.